Well, as expected, the Federal Reserve cut the interest rate a quarter point. No news there, was already priced into the markets. The Fed also changed slightly the timing of shrinking its balance sheet. It was supposed to go for another couple of months. They stopped now. In our opinion, that's a good thing. When the Fed was trying to set an interest rate and change the size of the balance sheet, at the same time, it was trying to do two things at once, not knowing which had an impact. Now, at least, we can focus on a single thing, which is the policy interest rate. In my opinion, it's hard enough for a central bank to get one thing right, let alone two things right. So that's a good thing. The Fed also said it was going to allow the federal mortgage-backed securities on its balance sheet to roll off, and they would take the proceeds of those maturities and reinvest them in treasury bills, notes, and bonds. And they would do so in the amounts roughly proportional to the publicly held outstanding U.S. Treasury debt. So we now have a sense of how they're going to realign the balance sheet. They have not explained what a proper size of the balance sheet should or could be. At least they have stopped shrinking it. That's a good thing for markets. On the other hand, Chairman Powell used the phrase in his commentary during the question period when he said, this is more like a mid-cycle correction. The stock market didn't like that because it suggests there may not be additional future rate cuts. On the other hand, Powell said, if the trade war effects are worsening, if things get worse, if the global questions are not resolved or they deteriorate, then the Fed has room for additional policy easing if it chooses to do so. The bottom line after today is we don't know what the Fed is going to do next. It's not clear there'll be any more rate cuts. It is clear the balance sheet shrinkage is over, and we are back to a data-dependent Fed for whatever that means. Notice that the data did not support a rate cut. The language used in the commentary discussed the nuances, the innuendo of cutting rates once as a way to sort of ensure that things continue on the present path. The other thing, of course, is Chairman Powell was clear about the fact that the Fed acted on its own judgment, not because of influence or persuasion or threats from President Trump. So that's where we are now. We'll see what the future brings. It is not clear what the next move of the Fed will be and when it will make it.